Sofi investors, welcome back to the channel. We have an emergency meeting by the Fed on Monday at 11:30 a.m. to determine if they should raise rates at a faster pace, possibly even on Monday. So what does this mean for SoFi? What does this mean for the broad markets as well? We will talk about that extensively here in this video, as well as the geopolitical tensions between Russia and Ukraine that are escalating yet again today. And also, what does that mean for the markets? Are you going to see a major crash? Are the markets going to chill out? Will they rally? That's what we're going to talk about here in this video, as well as go over everything else you guys need to know as far as the data is concerned around SoFi, including the technical analysis, my position on SoFi, and the option order flows on SoFi. And the fact that we're heading into the Super Bowl, SoFi is going to get a lot of attention, and I am also very excited about that and want to share my excitement with you guys. So let's dive into this video. If you guys find value, if not simply entertainment out of it, hit the like button for me, subscribe to the channel, as well as comment down below. Let me know your thoughts on this whole situation. So let's get into it. And first thing that I do want to talk about is the Federal Reserve emergency meeting. You guys can see right here that it says government and sunshine meeting notice, advance notice of meeting under expedited procedures. It said the following items of official board business are tentatively scheduled to be considered at that meeting. It says review and determination by the Board of Governors of the advance and discount rates to be charged by the Federal Reserve banks. That's the only thing that is being considered at this meeting. Raising rates or not. An emergency rate hike or not. Let me tell you, if the Fed raises rates on Monday, they are going to be basically admitting that they were wrong about inflation, that they are wrong about their policies, and they have to act even faster than what they have been telling the markets. So even though I don't think it's all too likely they will raise rates on Monday, if they can't wait a month to raise rates, that's going to be a hugely negative sign, and everybody's going to feel pain in their portfolios. I'm talking about a 4 or 5% down day across the board. The Dow, Nasdaq, S&P, Russell 2000, they're all going to get destroyed. That's a good thing if you have puts, not if you are just long in stocks. But I guess it is at the same time, because you can buy those stocks at a cheaper price. And like I said, even though this is very unlikely or highly unlikely, it could still happen. And arguably, I think it should have happened a long time ago. The same day inflation was over 7.5% on Thursday, they should have had this meeting and raised rates. But that's a topic for another video. Just keep that in mind. Everybody will feel pain in their portfolio, SoFi investors included, if the Fed comes out and raises rates. As far as the geopolitical tensions, we did have the Biden-Putin phone call this morning, and all we're really getting as of right now is that Biden warns Putin of swift and severe cost if Russia invades Ukraine. The conversation was over an hour long, so there was obviously more things that were said on that. We don't have the full transcript to go over. We don't have anything else that is substantial to mention here at this current moment. Nevertheless, it looks like the invasion of Ukraine is going to happen. It looks like Putin, from other sources, has made up his mind. And you are even seeing the Pentagon orders departure of U.S. troops in Ukraine as Russia crisis escalates. I honestly didn't think we had troops in Ukraine, but apparently we do, and that's another sign that things are heating up. You also have other countries that are telling their citizens to get out. You have Sweden, you have Norway, you have Japan, you have South Korea, you have basically every country telling their citizens to get out. And as we know, the government doesn't tell us everything, so that's basically a sign of that invasion is coming. And the biggest issue with that, besides obviously war is just bad, it is the fact that oil prices are going to go through the roof. And oil is a key component of the CPI readings for inflation. So that's also going to hurt inflation. It's going to make inflation go up even more, and that's going to affect the broad markets even more. So I think that's really the biggest thing that could affect the markets coming out of this. No, I don't think World War III is happening. I don't think it's going to turn into a huge situation that would really hurt the markets, but still, it's something market participants are paying a lot of attention to. And now I do want to talk about this. Hedge fund short sellers reloading after a year in the Reddit crosshairs. And it does go on to say that their short sales increased at the fastest rate in more than 10 years during the last 5 weeks. Data compiled by Goldman Sachs Group Prime Broker show. And you guys can see what happened last time they were this short on stocks back in 2021 in January. You've seen short squeezes left and right. And then you've seen a lot of shorts covering. Now you're in that phase of a lot of shorting. You haven't seen shorts covering. But the key is the short sellers, they're attacking stocks like Sofi that have a fundamental business and are arguably undervalued at their current price. 20% short interest of free float. 123.71 million shares that are sold short. Cost to borrow max of 1.47%, and the share utilization is 93.32%. Days to cover at 2.85 days to cover. So even though Sofi is not solely a short squeeze trade, if you're invested in Sofi, you're invested in Sofi for the business itself, not for a short squeeze. But that is a near-term potential catalyst that could come either on earnings or with some good news or a secular rotation, whatever the case is. It will help to fuel a rally to the upside. Now, something interesting to also point out is that Sofi was actually green on Friday, up 1 cent in regular trading, up 20 cents or 1.61% in after hours. This is likely because the Super Bowl is on Sunday, tomorrow, and Sofi is obviously getting a lot of attention for that, as well as DraftKings. DraftKings was also another positive stock, up 2.41% because of the Super Bowl. I would just be mindful of that buy the rumor, sell the news kind of situation if the stocks do start to dump that rallied into the Super Bowl. And I wouldn't even call it a rally, a 2% and 1.61%. Not really a rally, but I would watch for that mentality of people to sell out on Monday because the Super Bowl is over. Just watch for that. Not something I'm really expecting to see on a massive scale. I'm not saying we're going to see a 5 or 10% down day. But if the Fed does raise rates at the same time, it could be a lot of bad catalysts all coming at one time. So that's really what you guys need to know as far as the macro sense, the catalyst with the Fed, the Russia-Ukraine situation, which could boil over anytime now. It could be today, tomorrow, Monday. There's a lot of talks about Monday, but nevertheless, I'm still not convinced that Russia is going to invade nonetheless. Now, something I don't want to leave out here in this video is going to be the option order flow. The positive order value on Friday was 38%, 8 orders totaling $1.73 million. Usually we see a lot more activity than that, so it looks like short sellers, or not really short sellers, but just option buyers in general on an institutional level kind of took Friday off and didn't do much trading in Sofi with 38% positive order value. That's the lowest we have seen in a very long time. The past week, you have seen positive order value of 83%. That's more like it. But overall, firms and hedge funds are still very, very bullish on Sofi, buying a lot of calls and a lot of out of the money calls for that January 20th, 2023 expiration, as well as 2024 expirations as well. So let's dive into now a little bit more of the technical analysis that you guys need to know revolving around Sofi. And just keep in mind, we are at this extremely low level. $12.40 per share is extremely low in my book. It's not as low as $10.51 when we did hit that low, but obviously we bounced right off of that bottom. Now we really have to break out above $14 per share to even start saying we could see a bullish rally, right? We need to break out past 14. When we will break out above 14 is when the markets really start to settle down, shorts begin to cover on their positions and drive the share price up, because after all, 20% of the free float is shorted. 20%. So 20% of the shares outstanding are shorted. That's obviously going to keep a stock down in the toilets a little bit longer than if it didn't have 20% short interest. So keep that in mind as far as the technical factors and indicators that you do need to know. The MACD is now looking bullish. you can see the yellow line is above the blue line, so that is looking good right there. The Bollinger Bands, we did close slightly under the 20-day simple moving average. We can just not get a break when it comes to the simple moving average, the 20-day. You guys can see stock closed $12.40. 20-day simple moving average was $12.59 per share. We have had struggle closing above this since November. Really, November 17th was the last time we had a strong move above that. And once we do see a strong move above that now, I think we'll make that move to $14, $15 per share. So do keep that in mind. That's a very important technical factor that I like to pay attention to. And as far as the regular moving averages, the 50-day is at $14 per share. That's where you're going to see a little bit of resistance, and the 100-day and 200-day are about $17 per share. That's also where you will see more resistance. Now, it wouldn't surprise me if volume does pick up on Monday because of the whole Super Bowl effect, and it could actually push the stock up. It's really 50-50 in that regard, but it's all going to come down to what happens with that Fed meeting, as well as the Russia-Ukraine situation over the rest of this weekend. But it does look good heading into earnings, which is, I believe, March 9th. Maybe I'm wrong there. March 9th, March 18th. I'll get you guys that information. We'll just look at it right now. Sofi. March 1st. So I think that's going to be a big catalyst in and of itself. It's going to show that the business of SoFi is doing great, and there's no justifiable reason to be short on the stock. And that's basically all you guys need to know from the technicals and all of that. As far as my position in SoFi, you can see that I have a market value of $5,040, down about $1,365 in total, about 21.32%. So taking a little bit of a beating there, but it's a long-term trade, long-term investment. So I plan to take a beating at times until we are finally rewarded. Average cost $16.01, 400 shares at 12% of my total portfolio. Now, I did do something with my option positions. So I did, if you do look at the history here, I bought 3 contracts for around $134 a piece, right? And I spent about $390 on these contracts, give or take, $10 or so. I'm not going to do the direct math right here. It doesn't matter all too much, but I did have a gain in the contracts, and markets were getting a little turbulent, so I wanted to be a little conservative, get some capital back. So I did sell 2 contracts at $179 a piece, almost collected my full investment back. I think I'm off my full investment by about $40, but I still have a free contract to ride through earnings, or almost a free contract to sit and ride out. That is currently worth $150, $12.50 call, and my break even is about $13.84. Expiration of March 18th, and like I said, average cost of $134 for this contract. And really the goal here, the plan here, is to get a rally upon earnings, because I think earnings will be good. I do have some extra time as well, so I won't get hurt as bad if earnings are bad. I'll still be able to eke out a profit on this trade pretty much no matter what happens from here. So I'm not encouraging you guys to trade options by any means. If you do, great. If you don't, great. I was fully prepared to lose this money, but you always got to be safe and conservative when times of volatility and uncertainty are here in the marketplace. So that's what you guys need to know as far as SoFi is concerned, the macroeconomic landscape, the geopolitical landscape, and everything else. So hit that like button for me, subscribe to the channel, as well as let me know in the comment section what do you guys think about this information. Thank you guys for watching, and I will see you in the next one.